Hey everyone, and welcome to Talk ETFs, ETF.com's weekly video series. This week I'm speaking with Tim Lowe, who's a strategic advisor at Attestant. Tim, great to have you on the show.
I'm happy to be here.
Absolutely. So Tim, the SEC approved the first spot Bitcoin ETFs in the US earlier this year, and expectations are that they could approve the first spot Ether ETFs this summer. Can you talk us through some of the differences between Bitcoin, the asset, and Ether, the asset?
Great question. People think of digital assets or cryptocurrencies as just being one type of asset. But if you actually dig down into it, they're all very different. Bitcoin was obviously the very first cryptocurrency. And being open source software, it means that anyone can download it, make their own changes, make their improvements. And what happened with Ethereum is one of the founders of Ethereum, a guy called Vitalik Buterin, he took the concept of Bitcoin, which was a peer-to-peer decentralized payments network, and he said, okay, let's add in what we call smart contracts. So it's still decentralized. So it means there's no central entity controlling it. But what it means is arbitrary computer programs can run on this network. And that's basically opened up this whole world of opportunities where you can write programs that run on this network and can do all sorts of things. This is your programmable money kind of idea. And this is why we can have real world assets tokenized onto Ethereum. We can have exchanges built on Ethereum. And so really, where Bitcoin has done a great job of being this kind of a store of value, this payments network, Ethereum does that, but then it also adds in all of these other kind of software, all this computer logic running on top. So Bitcoin's great at the one thing it does, but Ethereum can do anything that any of the developers come up with. So if you think about, it's almost like a Windows operating system, but running on a decentralized network.
That's great. So how do you think investors should approach this space, Tim? Obviously, you mentioned these are two very different assets. Should the average investor hold both Ether and Bitcoin? And if so, should they hold them, at a market cap type of weighting?
Yeah, I think most investors will look to have a diversified portfolio across the different types of assets within an asset class. So going out the door, I'd say yes, they should hold both. Market cap weighting, it seems like an obvious way to do it. One of the other advantages of Ethereum versus Bitcoin won't initially be available within the ETFs, and that's what we call staking. So with staking, what that will mean is that holders of ETH will be able to earn like a native yield coming from the protocol. What I mean by that is, with Bitcoin, the people that process transactions, called miners, they basically earn Bitcoin rewards for running lots of complex computations on dedicated hardware. With Ethereum, the transactions are processed by validators who stake ETH. So they put down a security deposit, and from that, they earn a staking yield. Now, longer term, if staking is added to ETFs, that will provide a section of the digital assets that will actually earn a yield on top of just price appreciation. So then you may want to skew your portfolio and have more ETH that's staked than you do Bitcoin. But for now, I think market cap weighting is a sensible approach.
Gotcha. And you mentioned, Ether and everything it's capable of. Another blockchain that, has similar capabilities is Solana. And we've been hearing a lot about how we might see a spot Solana ETF in the future. A number of US ETF issuers have filed to launch such an ETF. Do you expect that we could see that, in the near future, a spot Solana ETF, or is it a completely different animal?
So it's similar in many ways to Ethereum. Again, there are differences, but in terms of whether an ETF will be available, with a change of administration and a change of kind of the process that the SEC is following in approval, then maybe. But if the SEC follows the rules they've been following up until, or the path they've been following up until now, I think a Solana ETF will be quite a long way off. If it does, and when it does get approved, then again, it may be worth having a diversified portfolio across all of them. But to be honest, I don't personally think that's going to happen anytime soon.
And before I let you go, Tim, is there anything else you want to add?
I would say that anybody interested in cryptocurrencies, you should have a look into it. Have a look at the differences between Bitcoin and Ethereum, look at staking. It's a very deep, broad, interesting space. One of the reasons I'm drawn to it is just the amount of innovation that's going on there. I think nowadays people are coming to realize that it's not all about the nefarious activities and the illegal transactions, but it's actually a very rich space where, yeah, there's a lot of innovation. It's very exciting.
Fantastic. Well, we're going to have to leave it there, Tim. It's been an absolute pleasure having you on the show. Thanks so much for your time.
Thank you very much.